Welcome, everybody, to the Chinchilla Picking Podcast. It is March the 29th at 2026. It is 4:11 p.m. As always, we hope to be entertaining, educational, and uplifting because we want everyone to make money. My name is David Underwood, and I am joined by the one and only, the podcaster of podcasters, the baron of bonds, the man of whatever this is, Brandon Beaver.
Ha. Actually, the name of that show is going to change to the Beaver Den. I just sent off like 30 emails to people to invite them on the show. So I'm going to give it about 2 weeks to let everybody reply to me. And actually, they have the link to that podcast too. So I don't want to change the RSS feed before people can look at it. So
Okay, gotcha. Beaver Den would be what it is.
Yeah, so if I take the clothes that are on the on the clothes rail here out of the shot, they don't exist anymore, right? That's how this works.
Yes, that is how this works.
Okay. Good.
Okay, we're good. We're good. All right, moving forward. So a lot happened this past week. A lot's going to happen this next week. Markets keep going down. Nobody likes seeing this. Red day, bad day. S&P 500 dropping what, third week in a row of consistent drops?
Five.
Fifth week in a row. Ridiculous. We passed correction territory.
Well, the S&P 500 is down 8.7%, but the Nasdaq is in correction territory and the Dow is in correction territory.
There you see. So we did pass correction territory in two of the three big ones. I mean, it's red across the board, and this is all to do with an Iran war that half of these stocks have nothing to do with.
Right.
And that's just the confusing part, Brandon, for me. But yeah, and then talking about red, it was the Cincinnati Reds opening day. Baseball started back up again. That should be a boon for the economy, right?
Well, for the local economy, yeah.
Well, I mean, in every city that has a baseball team, right?
Yeah. Sad events related to that with the fights and stuff that broke out. Man, this is supposed to be a family thing. Guys, calm down.
That is like a new thing at any big gathering in any big city. You have this now. That is a thing that's going on because it's trending. You get TikTok views or Instagram views, and so they just do it for the views. They just start running around, pushing, shoving for the view. It's sad.
Guys, artificial intelligence is going to see this. And when it is our overlord, that's what it's going to have in its mind.
That's what it's going to view people as. Yes.
Yeah. Oh, my goodness.
Yes. Anywho, red week again. And not even driven by fundamentals. And that's what's frustrating for me. It's not fundamentally driven, Brandon.
It's not. It's a fear of the Strait of Hormuz being closed and oil. It's not fully closed, by the way. But that's the
and
fear.
At the end of the week, they started letting tankers through.
Yeah, and then if oil prices go up, then people aren't going to buy other things because they're going to have to pay the high oil prices instead. You got companies like Walmart that have that fuel cost going up as like an additional tax to them. So that's, retail is not going to fare well. That's the fear.
That's the fear, but that's not the reality. And so,
well, it may not be, but also as a long-term investor, if you've got a long-term time horizon, why do you care?
Yeah. Hold up. We'll get there. Don't jump ahead, please, because I got some picks. We'll get there. We're going to talk later on about picks and what we believe are good buys right now because of this.
Yeah.
But I just want to talk about this. I just want to talk about this. But yeah, you're right. I mean, there's not a true fundamental reason. So you can make a case for oil stocks. You can make a case for companies that are heavily related on oil, such as airlines.
Yeah.
You can make a case for some of those. You can't make a case for the whole broader economy. I'm sorry. It's just not. It's not the same thing. Stop. Don't do that. I don't want to hear it. Because again, it's not 100% of all the oil in the world, and it is a big chunk, and it will make a difference, and it will make a dent, yes, but not to the extent that we are seeing in markets.
A lot of the supplies that NVIDIA uses, I'm not trying to, or Micron or Microsoft or whatever these tech companies are relying on artificial intelligence infrastructure, though. A
Yeah.
lot of that stuff does come through the Strait of Hormuz when it's being imported from China or Taiwan. So that is a relevant fear, but
If
it's
it's
not a
coming from
reason to
Taiwan, it
sell.
could just go around through the Pacific to LA.
Maybe, I guess, I don't know. Probably.
That's what I'm like, what?
Maybe I'm wrong. Maybe I'm
Yeah, I'm
wrong.
just like, can it just go the other way
It
if
could
it's
be.
coming from
Maybe.
China or
I don't
Taiwan?
know. Yeah. You go to Asia, you
Anyways,
fly over the
yeah,
Pacific, so
yeah. I
I would
mean,
think so.
oil is the major thing coming out the Strait of Hormuz. That's it, really. Everything else can be diverted.
I've heard agriculture. I've heard pesticides and
Okay,
such.
yeah. I've heard that too. I
High
saw one
food
article
costs.
on that yesterday. I remember now. Thank you for ringing my bell. Yes, I saw one article on that.
Yeah.
Pesticides, yes. So farmers, yeah. All right. All right, so let's get into this. Rules. Brandon and I get together 5 to 10 minutes before the show, and we tell each other what we're going to talk about. You actually hear the live back and forth right here on the show for you. We started to slowly get into some stuff. Wasn't an argument, so it's just a discussion right now. We'll see if we argue on the show today. But we stopped and we said save it for the show because we like to save our true discussion for the show. So Brandon, take it away.
Yeah.
Let's restart.
Okay, so the S&P 500 being down 8.7%, Nasdaq being down in correction territory at more than 10%, Dow's down more than 10%. What do we do on the Chinchilla Picking Podcast when there's blood in the streets, Dave? We buy.
We buy.
Yeah.
My little buffalo head. We buy.
So I think I'm going to give you two companies, Microsoft, or not Microsoft. Microsoft is one of them, but two companies for this show, Amazon and Micron, I think are buys. And I've covered Amazon extensively in the past, covered their financials. I don't think we need to touch that right now. They're doing great. Yeah. Amazon Web Services is incredible. But some news came out on, I think it was Monday of this week, that Amazon bought a company called Fauna Robotics.
What's the ticker?
Well, I don't know about the ticker for Fauna.
Okay.
I think they're a private company. So Amazon, obviously AMZN. But the reason why they bought this is a humanoid robot companion, similar to Codsworth and Fallout 4 for gamers.
You would have a gamer reference. You would.
Yes, I had to put that in there. This is a 3.5-foot humanoid robot that looks kind of like a Pixar character. I can pull up a image later in the show for my final thoughts if you want that. But Fauna is going to be a humanoid robot. Now, Amazon in the past, they had Astro, which was supposed to be a robot that was supposed to be a companion as well, and that failed massively. This is different. So Astro was on wheels, first of all. It was like a tablet on wheels. This is actually a robot that is biped. So it walks on 2 feet. And it can navigate your house, open doors, pick up toys, do light chores around the house for you. Go grab you a pop if you want it to go grab you a pop. You know, things like that. Again, I'm not sure how much I care for that, but for the aging crowd in the United States, 65 and over, especially those who are fall risks, this would be very helpful, right?
Yeah.
But let's talk about why Astro failed. So, first of all, it was more like a industrial kind of robot, like a tablet on wheels. It had, first of all, like they called it a suicidal robot because it would oftentimes throw itself off the top of the stairs.
It didn't like this. It was like, no, I'm done. These humans are just bossing me around. Goodbye.
So it also was a privacy nightmare. It was constantly recording people when people didn't ask it to record people. It was also marketed as a surveillance a piece of equipment. Okay. So people didn't want like surveillance, like, you know, rolling around their house. That's not fun. It had a periscope camera that after it would throw itself off of the stairs there, the periscope camera was very large, so it made it almost impossible for people to repack and send back to Amazon to repair. So you were stuck with like, a broken robot in your house and there was almost nothing that you could do. Amazon pulled the plug on Astro for Business in mid 2024. They were like, this is wrong.
Yeah.
This was a admit of defeat 100%. And they just pulled the plug on the entire project. But again, this is going to be, Sprout is going to be, first of all, made of soft like foam on the outside. There's not going to be any hard edges. So they say that it's kid safe, pet safe,
Stair safe.
and stair safe. Yes. So the other thing that Amazon did with this is they bought a company called River, RIVR. And this is a company that makes the software that makes it possible for robots to navigate stairs.
Okay.
So there's two different acquisitions here for this.
So hold on. So there's a company that builds the robot,
Right.
and then there's a company that builds the navigation for the robot. Why can't the first company actually just do the software for the? I mean, you're building the robot. Wouldn't it make more sense if you're building it from ground up? Like, I mean, that's what Boston was. It Boston Robotics.
Well,
that does that.
I don't know what the the engineering to that is, to be honest with you, but I can tell you that the way they built Sprout, it can navigate one floor fine on 2 feet. Apparently there has to be a separate piece of software for stairs.
And these are bipedal, so 2 feet robots, correct?
Right. They can open doors. They can go get packages for you and bring them in. And
gotcha.
so where this is good, really, like, okay, so if you and I wind up having a Sprout, that's fine. It's just for, like our fun and us being lazy. But where it's going to be, like I said, kind of the aging in place assistant. So what insiders are saying is that Amazon is going to use this to combat the loneliness epidemic among seniors. So it'll be conversational AI. By the way, I hope that I've heard that the new Alexas are a lot smarter than the old ones. I've got an old Alexa here.
Yeah.
And Alexa, why are you so stupid?
If you'd like to tell me how I can improve.
To tell me how I can improve. Alexa,
so hey, hold on. So conversational AI. So they're trying to make this because they've tried this with kids.
Well, we need Alexa to be more like Gemini, is what I was.
Yeah. So hold on. They tried this with kids, and they were parent approved. When parents approved of them testing this out, of being the kid's friend, quote unquote, as they play and everything else, and the kids took to it right away. And it just became like another person of the house to the kids, what they found out growing up with it. But the adults just, we don't accept it like the kids do. And I just can't see I don't know, maybe I'm just old now. These AI robot talking to me, trying to have a conversation with me. I mean, AI, I'll chat with Gemini when I'm trying to research something. I'll go back and forth and chat him, but I still look at it as a search engine and not as a person I'm chatting with.
Yeah, it could be dangerous in those.
Right?
Yeah, where, and especially like you've seen early models of Chat GPT helped people like talk them into like suicidal thoughts and things like that. So that is a scary aspect of this for sure.
I will say they did, and you talk about the suicidal part of this. That's actually, they allow, because usually with Gemini or some of these other ones, they only allow you so many prompts in a row. Right? And that's how they limit it. But if you mention certain things, they allow it to continue to try to help you and guide you into calling certain numbers, which is great. I love that they do that for people. And I've heard, because in my PTSD groups and other groups I'm a part of, I've heard that it has helped a lot of people who are alone and feel alone is talking to AI.
Yeah. And it's going to be
an AI robot would actually help people in those situations. Right. Yes.
It's going to be using Nova, which is Amazon.
Nova?
Yeah, Amazon. That's Amazon's
Gemini's the best.
Yeah, well, it's Amazon's chatbot, essentially. That's their large language model. So the other thing that you're going to see here, and this is where I think the biggest growth is going to come from in clinical settings. So this robot's going to be able to handle non-patient facing issues like delivering lab samples, fetching linens, showing patients to their rooms, things like that. So you're probably going to start seeing these. The timeline I can get to here in a minute, but the timeline's really showing around 2030 is what they're saying for
Really?
growth.
That quickly?
Yeah,
Because
and profitability too.
So let me get into the discussion we had before we started, and just so I'm going to catch everybody up who's listening. I know I've already said this to you, Brandon, so bear with me for 1 minute. Is that Tesla's Optimus, which is they've been researching and developing this now for what, 10 years at least.
Right.
They're saying Tesla's still saying it's not ready for general basic warehouse moving of boxes and so on and so forth yet for another 5 to 10 years. And Amazon, which has the biggest fleet of any type of robotics, which are still using kind of like iRobot type things to carry boxes around warehouses, still is a bipedal robot working in warehouses, still a minimum of 10 years away and then there's other companies, Boston Robotics, I believe it's saying it right, am I right in that? Was it Boston Scientific?
It's Boston Robotics.
Yeah,
and they're publicly
who has all the
traded,
DARPA grants in the world. They get every single DARPA grant every single year. But they are closer than really anybody, and even they say 5 years away at least. And so this company, Amazon, is saying 4 years away from one in your home.
This is insiders that are saying this. So this is
that's crazy.
It's not an official roadmap, but what they're saying, what the insiders here have said in interviews, between 2028 and 2030. So it could even be sooner.
That is nuts, man.
Yeah. Now, here's the thing about this too. They didn't publish the price tag of this acquisition, but also insiders have said at max $300 million, which is a lot of money, but it's pocket change to Amazon.
Yeah, that's nothing to them. They can lose that or make that in a day, at least, if not more.
And if this becomes a mass-produced product, if they can figure out a way to do it cheap enough so that average everyday families and middle class can afford it, the opportunity there is insane. And you were talking about Tesla's Optimus robot. That's actually, like, they talked about that extensively in these interviews. That's the reason for this. They want to beat Tesla to it.
Tesla's is so, like, just a few years ago. So back in like 2021, 22, forget when it was picking up an egg without breaking it and placing it in different spots. It was walking around. It was interacting. It was Tesla's Optimus program it's going to be trillions of dollars for Tesla in warehouse. It's going to replace all warehouse workers in the United States. And it eventually it's just, I mean, you see it in movies, the futuristic type where robots are doing all the work that, people are doing now on docks and in warehouses. And that's Tesla's Optimus.
Yep.
It's a trillion dollars of industry there, and Amazon's trying to do it, I guess now, is going to try and beat them. And that's crazy that they think they can.
Yeah, I guess we'll find out.
That's great. This is nuts.
Regardless,
it's going faster. And AI, it's going to have its own AI in each robot.
I know.
Just like we've seen an iRobot. I'm quoting movies here. I'm quoting movies.
What I like, if this price tag is right, even if this is a failure at $300 million, then that means Amazon stock's still a buy.
Still a buy.
Yeah. This is pocket change.
Nothing to that.
I feel like other acquisitions of that caliber have been billions of dollars.
Yeah, at least. I mean, so that tells me this is a brand new, small company, but they have something that Amazon was missing.
They do.
They have that missing piece.
And the prototype is already there. They've already got a prototype, but they've been selling it for $50,000. So now we need to scale it down and figure out a way to do it cheaper.
Yeah, they have that missing piece that Amazon didn't have, and they're like, hey, this company has it. Let's just buy it now before everybody else sees it.
Right. Yeah, we've got much better than our suicidal robot that was throwing itself off stairs.
Robot does not like stairs. Boom, gone. Seriously.
All right, let's move on here. The other company here that I mentioned was Micron. And Dave, me and you know that this stock traded in a range of $50 to $55 for like 6-7 years and just could not get out of it.
At one point, it was at 20 and 30 and wouldn't move, then 40.
Yeah.
And no matter where it's gone, its PE ratio has stayed the same. Every time it's gapped up or gapped down, PE ratio always the same. And Blows
So
my mind.
they did a restructuring that for them wasn't as big as some other companies had to do, but they essentially exited the consumer market of computers, and they still are dealing with some smartphones and stuff, but they started focusing on agentic AI and artificial intelligence, and it's paid dividends. So right now, I just want to give you five stats here that I think might make you a bull on this. Micron could pay off their entire $9.6 billion of long-term debt in less than 5 months on their current income.
Really? But
Yeah.
are they going to?
Probably not,
Okay,
but they
then. See,
could.
that's a
I'm
different
just saying
thing.
it's a good safety net. SG&A cost is just 1.94% of gross profit.
SG&A?
That's another one.
Really?
Yeah, SG&A. AI-enabled devices require about double the memory now. So even if fewer people buy phones, Micron makes more money because the content inside is more valuable. Return on equity right now is 33%.
Hold on. So hold on. Let's go back to that
Yeah.
memory part.
Yep.
How do they make money off the memory? Is it the storage? Is it the? Well, you mean talking about memory in the phone?
Yes.
Okay, so the storage in the phone, the hard drive of the phone. Not is it the memory or the hard drive? Because those are two different things.
Memory chips.
Memory chips inside a
Yeah.
phone. So the memory chips need to be bigger because not. And so when you get
It
like
doesn't even necessarily need to be bigger. They just need to be more efficient.
so well, hold on.
Yeah.
Let me explain. So instead of like a one, let's just use gigs because it makes it simple. Instead of a 1 gig memory, let's have 100 gig memory because we need to be faster and hold more in the short term. And it's not hard drive, guys. Memory's different from hard drive, but
Right.
let's say 100 gig versus 1 gig, but be the same size. Micron's going to charge more for that and make more profit off of it. So that's why it doesn't matter about the amount of phones. They make more money per
Right.
bigger
Exactly.
chip, quote unquote.
Exactly. So return on equity right now is at 33%. That's more than double the rest of the industry. Forward price to earnings growth ratio 0.44. So you're paying 44 cents for every dollar of growth. That tells me that the market thinks that this increase, by the way, 196% year over year increase of revenue because of what they've done.
Here's what
196%. This PEG ratio tells me the market thinks that this is going to be a one-off thing and that it's not going to last. I think the market's wrong.
No, Brandon's saying the market's wrong.
I've got more. I'm here. I'm going to prove
hold
it
on.
to you.
This is not the only company that's involved in chips or building memory or any kind of hard drive piece of a computing or software or anything like that. Any hard drive piece that is required that has come out in an earnings call or in a report and said that, hey, we can charge $100 more and people are going to pay it. And right now we're making mass profit off of it, and we can still charge $100 more, and you're still going to have to buy it, and we can make even more money off of you.
Right.
And they control it. They control the market because you need it.
Right.
It is crazy. These chip companies are all just have this much control over everything because if we don't buy the chips from them, they could just, I don't know, sell it to a competitor, create a competitor. NVIDIA has really invested in startup companies. They could just create a competitor to whoever doesn't buy their chips at this point.
And they've actually done that a couple of times.
They've invested in startups
to
compete with people who didn't want to pay their prices. They're like, fine, you don't have to buy from us.
NVIDIA's got this weird money loop where they've invested in these startups that are then turning around and paying NVIDIA back for the chips that they're buying.
No, it's printing your own money. They are just insane.
Right.
Yes. Go ahead.
High bandwidth memory 4 chip is brand new. That's new to the market here. And what they did, Micron used to pay spot prices, or used to sell at spot prices. I mean, basically meaning like, all right, we're going to sell this to you today at the price that it's worth today. And then tomorrow, if the price changes, we got to sell it at a different price, right? What they've done is they've drawn up these 5-year contracts now then they're called strategic customer agreements, and they've started signing people to these strategic customer agreements at 5 years so that they don't have to worry about the volatility of the price of these chips anymore. And so this is another reason why the growth is better for Micron. It's not so cyclical anymore because they're going off these contracts for these memory. And the high bandwidth memory 4 is 3 times the wafer capacity of standard chips. So that's creating kind of a permanent supply ceiling for these chips. And the HBM4, by the way, is sold out all the way through the end of this year now. So you've got a good backlog here. And the contracts that these customers are signing are not cancelable. So you've got guaranteed 5 years worth of revenue.
That's come on now.
People, I mean, the demand is so high for this stuff that customers are signing it. They're going with it.
This is yeah, I mean, this is the future.
Yeah.
You have to invest in it.
Right.
Or you get left behind. You don't have to invest in it. Sorry.
One of the things that happened, Google came out with a software called TurboQuant, which can reduce AI memory needs by 6 times. And then people sold off when that was announced. They sold off Micron by 7%. Here's the thing, and here's where people get this wrong. When you make a resource more efficient, consumption actually goes up. It's called Jevons Paradox. It was developed in the 1800s, by the way. So somebody researched this, and I don't know why it's called Jevons Paradox. I'm assuming it's somebody named Jevon that made it. But what they did is they said that, okay, we got these steam engines that make coal more efficient. And then the expectation was that like coal use would go down. But because coal became more efficient and cheaper to use as a result of this, actually the use of coal like increased 10 times over the like next decade. So that's what you're looking at here. As these chips become more efficient, they're actually going to be used more.
Man.
The one thing I want to look out for right now, there's a $100 billion project in Clay, New York. They're facing skilled labor shortages. So this was originally slated to be operational by 2028. There's delays. The first chips won't roll out of there until 2030. So listen to the news in the earnings conference call. Listen to that, and then just any news based on the Clay, New York manufacturing sites can probably affect the stock price. So
cool beans, buddy.
Cool.
So out of all these, what you've covered so far, do you have any calls, buys, or sells?
I think Amazon and Micron are both buys.
Both buys. All right. That's what we're taking away. I
actually
agree.
I don't think that Micron is cyclical anymore. I don't think it's going to be a value trap. I think that a lot of people are probably expecting that this is going to be, something that doesn't last for them, but I disagree.
Gotcha. All right, I'm going to go in first. I'll recap of last week, one I called a buy, Oklo Class A. Long term, I still believe this one has a way to move up. There's still a good use for Oklo. It is still something, if you don't mind holding it through the downturn in the market right now and waiting for the markets to come back up, this would be a good one to own. Still believe that. Let me tell you what I did this past week. I did what I said I was going to do, which was buy it Monday morning. I did. I bought it Monday morning. However, by Tuesday, it already jumped up over 10% for me, so I went ahead and sold it and took my profits. Because Tuesday, it was reporting earnings, and I had said on the show last week, I don't know how these earnings are going to go. It might present an opportunity to buy it after it drops, because it may have bad earnings. I was worried about that. And that's because they haven't quite yet gone in as fast as I would like into commercializing their product, right? They're still doing a lot of R&D. They have commercialized some, but they're not quite making the amount of revenue coming in that I would like to see. And I knew investors would be skittish come the earnings. So I was worried about that. So when it moved up 10% by Tuesday morning, I went ahead and sold, got out. Well, the earnings came out. It was exactly like I just laid out. It dropped. I did not buy back in. So I just want to be clear with our listeners because I did recommend this as a buy. This is still a solid buy of a company for a long-term investment, if that's what you're looking at. And again, when the market comes back around, which it will, it always does. I know everybody's like, well, this time is different and this war is different. It always does. That's one thing Warren Buffett has consistently said about the U.S. economy and the stock market. It will always continue to rebound and come back up higher than before. So when the Oklo does, that'll be a good time to make some money off it right now off it's down. So that's my revisit to last week and follow up on Oklo. I don't currently own it right now. I might buy it this week. I might not. There's other ones to buy. And let me go into some of the things I'm seeing around the market here. So let's go 2 headlines for you, Brandon.
Mm-hmm.
First, huh?
Go ahead.
Oh, my bad. I thought you had something to say.
No,
All right.
good.
First one is Anumana. All right. Anumana secures FDA clearance for first of its kind ECG AI algorithm for early detection of pulmonary hypertension. That's a lot, isn't it? Don't you love it when I do these healthcare companies? Anumana is a leader in cardiovascular AI. So it's received the FDA clearance for its pulmonary hypertension algorithm. It's basically when you do these ECGs, you have all these tabs you put on your chest, right? And you do a quick ECG test. There's a lot of things that human eyes and other things can't detect. But the AI, if you leave it on long enough, the AI software in there will detect even the smallest little hint of possible pulmonary hypertension. And they've been developing this and testing this. And the FDA has cleared it for this use, saying that, yes, this works. You're good to go ahead and use it for detecting things. And then after you detect it, go ahead and run more tests to verify. Because you can run more detailed tests, but it costs more money. And so this will determine, okay, is this necessary to run more tests or not? Basically, this has been working. The FDA clearance of our pulmonary, this is a quote from them, of our pulmonary hypertension algorithm is a result of rigorous clinical development and regulatory work. It marks a meaningful step toward expanding access to AI-enabled insights at the point of care. So it continued to expand AI amongst all healthcare and using it to do more detecting and testing and so on and so forth with direct to patients. As the first pH algorithm cleared for use ever, standard 12-lead ECGs, it's broadly accessible across all care settings. So think like if you walk into, now I'm just drawn about urgent care or your doctor visit, your regular, primary care visit, what have you. It can be used in those as well. Integrates directly into existing clinical workflows and supports clinical decision making in real time. So it has the potential to help identify patients earlier in their disease course. So this is huge for AI in healthcare and huge for this company as well. So they used over 250,000 de-identified patient records from Mayo Clinic because Mayo Clinic is a big investor in this company, by the way. It's not the only one, but it's a big one. And an independent multi-center study of 21,066 patients across 5 U.S. health systems. It detected pH or pulmonary hypertension with 73% sensitivity and 74.4% specificity in adult patients presenting with dyspnea. In a separate real-world analysis, a study of patients with ECG available, that's where you put the little tabs on, between symptom onset and pH diagnosis, ECG AI identified more than 85% of patients with pulmonary arterial hypertension and 78% with chronic thrombotic pulmonary hypertension. This suggests a potential opportunity to support earlier detection of these 2 treatable pH subgroups. So you're gonna detect these things so much quicker, so much easier, and use an AI to detect via these tests and software. This is a great step forward in healthcare.
Sure.
This is going to keep continuing to promote AI And AI usage now has gone beyond just, hey, I'm talking with Gemini and it's doing research for me, which is great. And that's what Brandon uses it for. But it's also doctors using this with their medical equipment that we already have in place and using it to run through these tests quicker and find things that we miss as humans.
Yeah.
So
that's the one thing that's super exciting about artificial intelligence.
right. All
That's the
different
exciting
things.
part of it.
Yes. Yes. Right. So how does that work in business, Dave? How can we make money off of this? Because we can't buy Anumana right now, right? It's not a
Right.
public company, and Mayo
Not
Clinic owns a majority of it. So what are we going to do with this? Well, here's some things to think about when you look up AI in healthcare. Here's another article that could give you an idea of what's going on in the AI market. Insilico Medicine, that's an AI drug developer. It uses AI only to help develop drugs. It secures a $2.75 billion drug collaboration with Eli Lilly, a drug company I own. This now it includes milestone payments within this drug collaboration and payment, but pharmaceutical companies are increasing turn into AI to accelerate R&D. So they're betting on new modeling tools and automated labs to unlock efficiency gains across their pipeline, and in line with a push by the U.S. FDA to reduce animal testing in the near future. So AI is going to allow us to get away from animal testing and use it to run all these tests through this. Under the agreement, Lilly will receive an exclusive license to develop and manufacture and commercialize preclinical oral drug candidates by Insilico Medicine for selected diseases. Insilico Medicine also said that it will receive the upfront payment of $115 million and eligible for development, regulatory, and commercial milestone payments that could take the total deal to about $2.75 billion. So this is a great job for Insilico Medicine, a AI-only company, but also shows that Eli Lilly is now pushing into this market, which means all the other major drug companies are as well going to be pushing into this. Now, Eli Lilly has a huge advantage over a lot of these other healthcare companies with the GLP-1 that has just been raking in cash for it, and it's using this to fund all these other pipelines that it has going on, such as the cholesterol drug I covered about a year ago, such as this right now, buying up a AI drug developer. Eli Lilly is taking the money he's making from Mounjaro and using it to fund all these other R&Ds. So it's a great company to own. So if you're asking me, how can I make money off of AI in healthcare? Eli Lilly is definitely one you want to own if you want to be in part of this future going forward.
Eli Lilly and the chip makers.
And the chip makers, yes. So let's get into that. I promise we would. I promise we would. You promised we would. We started at the beginning of the show. Thank you for not stealing my thunder, Brandon. I appreciate it. That was very nice of you. You didn't have to do that, but you did, so I appreciate it. One of my calls this week is a stock that is beaten up that Brandon has consistently said is a great company. They continue to up the revenue every quarter after quarter after quarter. They do fantastic things. They are creating their own competition. It is NVIDIA. NVIDIA has been beaten down. They're now below 170 or 166 last time I saw. It is a buy from me. Brandon, go ahead. I know you want to say something.
It's the most ridiculous thing. I don't care that it's sold off. I'm fine with it. If you want to buy more, that's absolutely recommended. The market is scared that artificial intelligence is going to take everybody's job, so they're selling NVIDIA.
That's one of the reasons I've heard for it. That's
Yeah.
one of the reasons I've heard. I've also heard the other reasons that Meta's trying to make their own chips. Tesla's trying to make their own chips. And yeah, they all are trying to make their own chips, but they're at least, again, we've said 3 to 5 years away from doing it. NVIDIA is going to continue breaking in the cash until then, and they're building up all these other companies' competitions. They're going to own all the other parts you need for these whatever you have, whether it's an AI vehicle or an AI computer. You're going to need parts from another company that NVIDIA built or owns.
Right. And there's a reason why HBM4 from Micron was built specifically for NVIDIA's Vera Rubin.
Exactly.
It's the industry standard.
Yes, exactly. And so NVIDIA is not going anywhere. They're going to continue raking in the money. They're very well valued at somewhere around $200 a share is a good value for that company. And since they're at 166, that means they're below value. That means it's a
And
time
by the
to
way,
buy.
their revenue growth and their earnings per share is actually accelerating. It is not slowing down.
It's crazy.
Yeah,
And so right now, NVIDIA is a strong buy. That's my
absolutely.
recommendation. If you're going to buy a stock this week, buy NVIDIA Monday morning while it's still at 166 before everybody else realizes that this is ridiculous and they buy it back.
Yeah, I'd overweight the tech sector and semiconductors right now. I would overweight it. I'm
Yeah,
overweight
everything
on it,
is
and I
down.
don't care.
Yeah.
Yeah,
Everything's down right now because of what's the situation in the Middle East, and rightfully so to bring the market down a little bit. But some of these are way down for not a good reason, and it's
Right.
it's a value time to jump in with your money and just put it to work.
Right.
So there you go, Brandon. Final thoughts. Oh no,
Yeah,
the one earning this week. Sorry, the one company of value that I saw on the list of earnings this week is Nike. There'll be a good idea of how the discretionary income market is, their sneaker market, how they're doing on their turnaround. Brandon's a fan of their turnaround. At least you said that last quarter.
Yeah,
on
I'm
earnings.
okay on it. I sold it.
You sold it. Okay, so he sold it. No longer a fan of the turnaround. We'll see if Brandon was right or if Nike is actually going to turn this around and Brandon was wrong. We'll see this week on Tuesday.
It's not a right or wrong thing. I just found
It is a right. I like being right or wrong about this because it makes it fun.
Yeah, I guess so. But there's other opportunities in the market that were better that I saw than Nike, which is why I got out. I took my losses. I think I lost. I'm pretty certain I lost on it, but took those losses and went elsewhere, and I'm doing just fine. But
there you go. Final thoughts.
Yeah, we'll see. Final thoughts. Look, recent surveys are showing that it's not just the big heavy players like Meta and Microsoft and Amazon that are making money on artificial intelligence. This is now leaked down into the mid market as well, and small caps are now using artificial intelligence to generate higher profits and higher returns. NVIDIA is not slowing down. Micron's not slowing down by these companies while they're low.
I'm going to, for my final thought, echo Brandon's point. Amazon's below 200 a share, first time in probably a year. Google below 300 a share, first time in probably 6-7 months. NVIDIA below 170 a share. Outrageous that it is. Apple dipped. Tesla's dipped a lot. Tesla's, a good buy at this level. I mean, I'll probably hold off on Tesla. I would definitely buy Amazon, Google, NVIDIA. Any of these right here is fantastic. By Oakland's now dipped below 50. They're now at $49 a share. Good opportunity.
There's almost no reaction whatsoever to the fact that Apple is going to be using Gemini for its chat features now.
Yeah,
and Google did nothing. The stock did nothing. It's just weird.
Yeah, Apple's a strange beast. It's definitely a strange beast. I'll give you that. I don't know how to time Apple. I've never been good at timing Apple. I just know when Apple looks like a good value, you buy it, and then every time I buy it, it dips right away for like a week or two, and then it comes back around and does what I knew it was meant to do.
Yeah, you don't trade it; you buy it. That's one thing that Jim Cramer's
it's
been
so
right
hard
about.
to trade. It's so hard to trade. I've tried over the years, Brandon, and every time it dips right away for the first few weeks, and I'm negative. And then it finally comes around and does what it's meant to be doing, and I'm like, oh, thank God.
Right.
I could never time it right, ever. Just like, you either invest in it or you just don't. Is my recommendation. It's just weird. It's a weird stock.
Sure.
All right. We thank you for listening. Please hit the subscribe button. Follow us. Follow the Beaver Den or whatever that is.
It's whatever it is right now. Whatever this is. It's not on Apple yet.
Yeah.
And then put it on Apple. Yeah, I'm waiting until I get like a little bit more of a clarification from myself and from the show itself as to where it's going to go and to when I'm going to be recording. 2 episodes are already available on Spotify and iHeartRadio and Amazon Music. As soon as I have a for sure weekly schedule, that's when I'm going to go on Apple.
All right. Nice. But thanks for listening. As always, we hope we have been entertaining, educational, and uplifting because we want everyone to make money. Have a good night.
Have a good night.